Tuesday, April 8th, market analysis. Stan Ehrlich, good morning. Well, I start out with the stock market indexes for the first 5, 7, 8, 10 minutes, and then go to futures markets. And I've got a couple of stocks that I'm monitoring, Apple being one of them. And we have a bounce, but not at the moment very good. Okay, the E-mini managed to get just a little bit above yesterday's high earlier this morning and is now pretty much low and last and has been making new lows in the last several minutes, coming down to almost unchanged after being up about 20 points, quite a bit higher and a little bit above yesterday's high. What have we got? Let's go back. We've got a double or triple top formation that started to decline on February 21. By the time, about March 4th or 5th rolls around, we're in the process of breaking out of that double or triple top to the downside. And I had measured a minimum downside objective around 5,500. It took it until about March 31st. That's only about a week or so ago to get to my minimum downside objective or very close and start to bounce. But all of a sudden, we all know why, tariffs. The market started to collapse, and that would be Thursday of last week, new lows by a substantial amount. Friday of last week by a huge amount, and a whopping big follow through to the downside yesterday by another huge amount on or shortly after the opening. But then a rumor started to filter through the media system that there was going to be a delay, maybe, in applying the tariffs, and that caused the market to bounce back up a heck of a lot, but it did not hold very well, closing back down again around unchanged. Nevertheless, the way it moved is the way it moved, whatever the reason is. I'm a technician, not a fundamentalist. So what have we got today? A follow-through upside rally, but it's not holding very well. I'm concerned that it's not going to hold and it's going to continue to drop, and we're going to get another new low close, not necessarily below the low of yesterday, but I'm afraid I don't see anything at the moment. Let's go to the 1-minute chart that is causing me to scream bloody murder. We've got a bottom. I still have to say maybe because of the extreme, and I'm going to go back to the daily data chart, extreme oversold condition way down to almost 10. You do not see that very often on daily data charts of any kind, really, but maybe once or twice a year. And they are almost always a turning point back up again when they get that oversold. So that's a saving grace as to maybe we've got a bottom here. But it's only been a day. And it's not holding at the moment very well at all. Going back to the 1-minute chart on the E-mini, we just made new lows just now. We're only up about 2.5 points, or 24, 25 on the E-mini numbers. It would be 2 point something on the S&P, SPY, and still sinking. I don't see any great support area. There's a couple of minor ones, but you've only got yesterday's data basically to deal with because the market hasn't been this low since way back January of 24, a year and 4 months ago. And there wasn't much there either, but I do have some markers. So the lows we saw yesterday was in what I deemed to be a modestly important support area. Not super great, but hey, you grab on what you can under these kinds of circumstances. But I'm not thinking that's good enough. So here we are. New lows. Now let's look at the spider, which is going to be SPY, about the same thing. Longer term support started to break down end of last week, and because we have 6:30 California time to 1 o'clock, a short 6.5 hour trading day for the SPY and QQQ, you do have gaps often enough. Gaps are almost always closed, so somewhere in the future, and I'm afraid I'm not able to claim it's going to happen soon. I don't think so. I think it's maybe months before we get back up to 555 on the SPY. And then we may have built a bottom of some significance that I can kind of support the idea that it's going to keep on going up. But now, nope. Now I have to see the right kind of action in order to tell me that this thing's not going to break into new low ground, which I think it's going to do, and then have another sharp break to the downside, I'm afraid, and going to get oversold again, maybe not down to 10 or 11 or 12. And then you'll have a potential divergence with new lows in price, but not in the indicator. It's going to be very difficult for another break. Going to have to be huge in order to get the RSI back down to 10 again. I just don't recall any technical situation except maybe COVID. That 1 month, February 20 to March 20, give or take a day of 2020, I think it was, for that to happen, the RSI to get down to 10 again. We'd have to be crashing down to, I don't know, maybe 400. I don't see that at this point. I can't rule it out. 1 minute chart, still chewing its way down. QQQ, gaps to close, and the only buy signal we got yesterday, it was an outside up day on the QQQ. It was in a support area. We did have a key reversal to the upside or a bullish engulfing, same thing. But the gaps that we have above the market, it couldn't even close hardly any of it. Today's high stopped at yesterday's high, cold turkey, in a resistance area, now above the market. Turned right around and has been making new lows since a little bit after the opening. Lasted less than an hour, the rally, and now down low, new lows and new lows. A little bit of support here, but again, we're looking at the data from only 1 and 2 days ago. That would be Friday and yesterday, Monday. But, that's all we got to deal with on a short-term basis at the moment. And it's bouncing slightly. Modestly interesting. Let's go to NASDAQ. No gaps to close because it trades 23 out of 24 hours. Gaps are pretty rare, usually only over the weekends. We saw a few of those in the last couple of months. Didn't close, didn't make a higher high, came all the way back down to almost unchanged, and is trying to hold here. Not bad, but it's too soon to tell. It's been 5 minutes, and I haven't got that much price action. But if it was going to hold, this could be one of the price levels that gives me ideas that it might try to hold around the close of the last couple of days, a retracement. Okay, maybe, but got to see something happen on the upside. Not confident about that at this point. And the YM is the same thing. Extreme oversold conditions. This got down to 10.71 or so. Last time it was down that low on the RSI, it bottomed out for about a week or a few days anyway. This has only been a half a day now. And that was December of last year. But in order to find another occasion where it got down close to 10, 9, 10, 11, you've got to go all the way back to October of 23, which had a bounce only of a week and a half or so. Then finally a major bottom, and that was a divergence, new low in price, but not on the indicator, which again, we just might have in the next couple, 3, 4 weeks or something. But that remains to be seen. YM, 1 minute chart, nothing new here. Maybe a little support where it bounced off of so far. Too early to say. Russell Index, major support area, did hold on the break yesterday, closing back up above that support. Still a slight down day. Today already well below yesterday's close and a potential new low close for the move down, and didn't even have enough strength to come up close to the high of yesterday where the other indexes did. So the Russell's doing very poorly here. And the 1-minute data. Okay. What about bonds? Well, yesterday I told you that we had a bearish engulfing ER sell signal and we're down more today. I also mentioned that I would erase the head and shoulder bottom markings, which would be the neckline, which has now been erased, and the shoulder, the head and the shoulder markings, they've been erased because this break yesterday was much lower than the neckline, and that is not supposed to happen. And today there's no bounce back. So we're still well below what was the neckline on a pattern that was working until yesterday just fine. But a bearish engulfing and dropping below the neckline, closing below the neckline kills the pattern. So I've erased the head and shoulder markers. What do we got? Big sideways trading range, small, tiny head and shoulder bottom, mostly in January of this year. Yep. Took about 5 weeks to build it. It's worked past tense just fine. We don't have any lower lows yet. I'm not real confident about that because that bearish engulfing yesterday, pretty significant, I think. So I am expecting a test of 115.08. Minor support, actually decent support. Let me put a little marker in there. This was earlier the shoulder low area. Now it's just going to be some support. And if it can't hold that, then we're going to be coming down close to 113, low 113s. 10-year notes. I've also erased, we can't forget the long-term potential major double bottom. That's still definitely in effect. 10-year notes, long-term major double bottom formation. I've erased the markers for the head and shoulder bottom, which did seem to start back in November. But yesterday's bearish engulfing ER sell signal kills the formation, dropping well below the neckline. Not supposed to happen, not let alone with a bearish engulfing. Saying that tells me we're going to be coming down some more. And today we did get lower than yesterday's low. And we are down 11 or so at the moment. So it's starting to come down some more. Where to? Probably 110.12 and a half. After that, looks like 9.5, 109.5. And then we'll see what happens after that. Okay, crude. New low close possible. Still oversold. Not holding at the moment support area, which it broke yesterday and closed back inside, but it's paying no attention to it today. And we did make new lows for in a very extended period of time, ever since about July of 23. So I am looking for a test of 56.50, 56.60, 56.70, 80. Oh, the three little lows there back in June of 23. And earlier, some evidence of the same levels. So I'm going to call it 56.50. Probably pretty soon. Next few days. But because it's oversold, you got to be very, very careful. Don't think it's going to be safe to be going short here. It's not. I would never go short when the market's oversold. Almost never. I'm looking for a buy signal, but I'm not finding it, so I have to allow for more weakness. Next, we got the same thing happening in heating oil. Support did hold. We have bounced a little. We're currently lower on the day. There's no reversals happening. All I got is support and oversold. which sometimes is enough. I don't see the bounce coming. I don't see a rally. I don't see any reversal. I think we're going to come down and test 1.9668. That's fairly decent support. Next, natural gas's head and shoulder top is working great. Classic. Shoulder, one day, February 20th. Head of the formation, a spike up, classic, March 10th. Last shoulder, a little sooner than I was looking for, but it's there. And it's a little lower than I was looking for, but we're good. March 19th. Next day, came down, tested the neckline. Next day, started to break out, albeit slowly for a few days. Came back to the neckline, slipped a little, tested neckline a second time, which is a little unusual, and boom, boom, and today, boom, new lows. And today, we're not holding support. Yesterday, we tried to, didn't do a very good job of it, but it stayed above the support level, but now we're breaking below it. You realize that we're already halfway down to my minimum downside objective, which is 2.973, give or take a little, and maybe lower. Frankly, I don't see any particular reason why I would stop the move down other than it's a downside objective. Yeah, we have a little support there. We're looking at a low back on January 31st. Slightly under that objective, but better support seems to be in the ballpark of around 2.58. That seems a little more likely. Bearish, head and shoulder top working perfectly. Called it every turn so far. Okay. Gold, overbought condition, reached an upside objective because of a pennant formation, and I had measured two objectives. One because of the back of the pennant, vertical size, the widest part, and measuring the flagpole also. Way back here, or I think I started from here, didn't make too much difference. How much from here up to the high of the back of the wedge or pennant formation, and you take that vertical distance from here down to there, and you start from the breakout point and you get up to there. We got there in overbought conditions. No surprise, it's coming down. It's a little surprising it's coming down so fast, but I didn't say anything about how quickly. I just said it's going to be coming down. So today we're bouncing a little bit. Doji near the low and last, not holding particularly well so far. Wouldn't be surprised to make lower lows here. Looking for a minimum move down to 28.81 and probably lower. Next, we got a head and shoulder top in silver. It broke out on Friday to the downside with a vengeance. It collapsed in a 2-day period all the way from approximately the shoulder high, which is around 35, to breaking out and getting down and closing at 29 in 2 days. Huge break and a breakout. Bounced right back to the neckline. Yesterday's high, classic. It's all happening super fast. That's all. Everything's happening the way it should, just faster than normal. Now slipping off, still a little higher on the day, but almost low and last. And I can't help it. I'm looking for lower levels. I'm looking for the market to break below support, which held way down here at 27.50-ish. Previous lows, same price level approximately. Previous lows, same. Highs, close. Highs, close. Highs, close. There's a lot of highs and lows going back quite a substantial amount of time. January of 23, even December of 22. So, no surprise that bounced off of it in oversold condition yesterday. But that's ancient history now. I think we're going to come down and test it again and probably make lower lows. My downside objective in silver is 23.5. Another major historical support area. Next, copper. Sorry, platinum also has broken support, although a little bit, and bounced back this morning so far. So yesterday's lows are wiped out. We made lower lows by a substantial amount. Or have I got that confused? I think I've got it confused. Let me slide over here. I clicked on wheat by accident. Sorry about that. Platinum. Okay, slide over. Yeah, today's range is almost the same high as yesterday's high. We're currently trading a little bit higher on the day. Not doing particularly well. I think we're going to again challenge yesterday's low. We've made new lows now for a very long period of time, multiple years, and that was yesterday. Now it bounced back, oversold from those new lows, but I don't see any follow through to the upside here. I'm sorry, there's a lot of resistance above this market, and the odds are that it's not going to get up to and through this and get up to, I don't know, 11 something for quite a while, because that's a lot of resistance. This just looks bearish. I can't help it. Copper, almost the exact same story. We broke lows going back to March of 24 a year. It was oversold yesterday when it did it, so it did bounce pretty good. But now we've got a test of support down a lot more today, approaching yesterday's lows, back to a support level which kind of held yesterday, so it might hold again. But I don't see any reversal. I don't see any bottom building. I don't see anything except a bounce, maybe, because it's support and oversold. But it's not even bouncing. It's still making new lows periodically during the day. The grain markets. Yeah, I got some optimistic commentary here. Beans barely held, but they held. Yesterday's low and the day before Friday. Just a hair above the lowest low for years on soybeans. So we're looking at a double bottom. We're still looking at a possible other kinds of formations, but we got a high today above yesterday's high. It doesn't really mean much yet. We'd really have to get up to today's high and higher than that. And we have to fiddle around for a few days, maybe a little bit higher. The key here is closing above 1035. That's 40 cents higher than we are. That would make me start talking about a little triple bottom or double bottom and some upside potentials that would be significant. Right now, mostly you got resistance above the market. The rally this morning stopped at the resistance area, and we're still at that ballpark. So got to have more strength. Otherwise, it's going to turn down again. It's going to end up making new lows, and we're going to see lower levels. And that's what I vote for. Unfortunately, I don't see enough of a bottom yet. Maybe, but not yet. Next. Okay. Soybean oil. Doji inside, down a few ticks, nothing major. Support area is holding. But we're neutral, very neutral on RSI, so that's not giving us any help at 50, literally almost exactly 50 at the moment, 49, 47, 64. So the bigger pattern, you got a double shoulder, you got the head, and you got a double shoulder on the right. We're nowhere near damaging the pattern at this point. Anytime it could bounce off of, which it's starting to do on Friday and again yesterday and so far today, a support area. So let's start getting above today's high and then yesterday's high and then the day before's high. And then it would be very significant if we start closing above 48.60. I'd like that a lot, especially if it happens in the next few days or a week or two, without going much lower in the meantime. But if it keeps on chewing away at support, then it's going to start to fall in the same category as some of these other grains that were looking like this weeks ago and now look a lot worse. What about soybean meal? Speak of the devil. Tried to rally up, couldn't do it. Started to float lower, made new lows for months and months and years. A rally today and a little bit of a bounce, sort of maybe yesterday off of some support area, only established in the last 3 days. I don't think there's going to be any correlation with just those lows. Minor, all the way over here of October 22. Yeah, there's some correlation. That's nice. But the resistance above the market and close, not too far away, is much, much more profound than the support of a couple of years ago. So down we go after a little bit more of a bounce. Bounce up to about 298, a little bit below 300 is fine. Yep, that would qualify just fine. Or anything a little lower than that. And then new lows. Now we've got corn making minor new highs for a couple of weeks. But it was there a couple of weeks ago, stopped and went down to the lows. Luckily, the lows held, creating a little double bottom at the moment, with a bullish engulfing on the low of the break, exactly low day. So that reversal has now proven itself nicely, and we have a higher high since then. But there's no breakouts here. I've got to get above and stay above 477 on a closing basis to do the job, which is basically the high on March 11th. Then the double bottom will kick in, and you have an upside objective if it can do the job of 513. That is dangerously close to a breakout of this large head and shoulder bottom, with February 26th being a shoulder, and that was of 2024. The head of the formation is in itself a small head and shoulder bottom, which already worked. Past tense, it did what it was supposed to do. It's ancient history, but that pattern was ahead of the bigger pattern. So it's a pattern inside a pattern. Last shoulder low is a double bottom. I just talked about it a moment ago. So, okay, this is doing okay. Not bad. It's just got a long ways to go for a breakout. And then the minimum upside objective is 635-ish, 633, 634 or more. So let's see if we can break out of this little double bottom, which is the last shoulder low, and rally up toward the neckline. Next chart. We got wheat, doji, a little like corn, but not quite as good. Let's see if we can get some strength going here. I don't have any head and shoulder bottom. All I've got is oversold conditions and a little bit of a bounce. So I'm afraid I can't get too excited about this until it gets above 575. Then we probably have an upside potential of 621. And if that is broken, now we're talking something significant in terms of the time frame and the price range of bottom building, but there's no particular name for it. It's just a lot of sideways with a little bit of lower lows, but it's not happening yet. I got to see something exciting here. It's just not tickling my fancy yet. Okay, cattle, minor new low, getting oversold. We do have a test of support, not particularly important yet. I do still think it's going to get down to 190, and it might just do it in the next day or two and simply get a little bit more oversold. This oversold level was just barely under 25 at 24.91, 24.91. So it qualifies, but barely. So I think it's going to sink some more, get a little bit more oversold, and maybe get down to 189, 190 first, and then start to rally some. Miss Piggy, I can't say anything here. She's just getting lazy. Sideways, kind of looking like a pennant formation, sorta, not really. Rising bottoms, flat top implies it's going to break out to the upside. If it does that, then I'll get friendly. There is a gap to close way up here at 93-ish. That's what I would be looking for. but I can't get it started until it closes above 88.60. Okay, Shell, a stock I'm watching. I'm just noticing the E-mini has just gone negative for the day. We are now below yesterday's close. We gave up a heck of a good rally this morning completely. And we now have the chance of a new low close on the E-mini. I'll show you in a moment. Shell approaching the lowest lows. If you break and close below 60, let's say 60.10, obviously 60 flat, you're going to be breaking below a significant support level and starting to get a lot more bearish, to be honest with you. Gosh, do you want to call this a double top or a triple top? Because you've got basically one high at 74, another high at 74.60, another high 74, 74, 74, 40, 74.50-ish, another high 73.74. Do you get the message? It stopped once, twice, 3, 4, 5, and lastly 6 times at 74 to a little higher than 74, not even 75. Yeah, looks like the top is 74.60 in a 60-cent range on a $70 stock and crashed. So I'm calling this a very important, profound, long-term major resistance area. We did get a great sell signal on the secondary highest high. That's super. That's not going to hold. This is about to make new lows. It's about to go a chunk lower. I'm thinking 52. Oh boy. Apple not holding very well. In a support area and oversold. That's nice, but let's see it start to show some bullish activity. Rally this morning didn't make any higher highs at all. Now we're trading well below the previous lowest close yesterday. We almost closed an old gap yesterday. That's interesting also. So maybe we're going to, at a minimum, finish closing the gap. That would be 173.40-ish. But I think it's going to come down to 170, 165 ballpark. It's got support there from back in October of 23, basically April of 24. So that seems like a good objective, good support. And if you can do it relatively quickly, like all of a sudden this week, you'll be even more oversold. We've already been down to 14. Yeah, we're about to bottom out, but it could be a very sharp break first. I don't know. I don't like talking bearish when you're down to 14, 13. To me, that means you're very, very close to an upside turn of some sort. I'm not saying it's going to be big, and I'm not saying it's going to last very long. Just enough to get out of oversold and bounce up. And it may stop at this resistance level of 195. But I'm not saying that's going to do that immediately. I don't see it starting. And we're going to go back to the E-mini. And we're going to go back to the 1 minute. And we have been making new lows. We are now down on the day 2 and a fraction points, or 23 E-mini points, 24. Sinking like crazy. Well, there goes a 20-point rally. We were up to 53.01, 53.04 at 7:18, 3 hours and 15 minutes ago. And it gave the whole thing away. I'm sorry. I'm a little concerned. You guys have a great day and profitable trading to you.